What's going on? How you doing, people? This is TK, Master Wealth Builders LLC, and I'm financial service licensed wealth strategist, and I try to come at you guys with different strategies that you may not have thought about, because that's the nature of becoming licensed. You get exposed to methodologies, strategies, implementation ideas, right? So this is for real estate agents. I have been trying to do strategic partnerships with real estate agents, with CPAs, with tax professionals. I've been engaging with a few of you guys on Facebook, but we don't like to work together. I don't know what it is about the black community, but we really are on this selfish roller coaster ride. So I really would like to work with you guys, because a strategic alliance benefits my company and your company, and it narrows down a target demographic that is more likely to understand these concepts. So I'm presenting to real estate agents the concept of parking money, because that's a staple within your industry. You close on a house, and I talked about this in multiple different videos, where you have a tax liability when you close on that house, depending upon how your LLC is structured, right? If you're operating as an individual and you take personal money from a closing or sale of a house, what I suggested is that you learn how to leverage insurance to create wealth. So this tactic involves you taking the closing money from your house, put it into a cash value life insurance policy, infuse a lump sum up front, pay a specific amount every month, and then after the first year, you can borrow against that cash infusion plus the amount that you're paying every month. So you have a year of payments, and then you have the cash infusion from the closure, the sale of your house, right? And leverage your way into the next deal. Real estate people always talk about access to cash and having liquidity. And a lot of people close a lot of deals, and they always talk about parking money somewhere. So where do you park that money? Do you park it in a CD? Do you park it in a money market account? Do you just sit it in a savings account? If you leverage it, it's an advanced strategy. It's a wealth strategy that the super rich use to get ahead. You can cash infuse a IUL, and then borrow against the IUL to create your next deal. And because you're borrowing against yourself, it has nothing to do with pre-approval, credit, and all that other stuff that comes with hard money lending. It has to do with how much you saved up until the point in which you want to take the loan. So this is a strategy. That's all I'm going to say about it. It's an idea that allows you to leverage insurance to create wealth. And it is an out-of-a-box type thinking, but it is, completely possible. You just made $50,000 on a closure of this house you sold, right? You infuse that cash into a IUL, and then a year later you take a loan out. You could even apply this as an individual. I was talking to a client who said his goal was to buy another house. This is going to be an investment property. And he was talking about the down payment, $50,000. And he said he wants to do it within the next year. So I was like, the advanced strategy is put the $50,000 in the IUL. Since you're going to wait a year anyway, borrow against the IUL when it's time to buy the house. And because you're borrowing from yourself, you're doing the infinity banking concept. You pay the money back, rinse and repeat. You don't have to ask permission. It's just based on how much cash is available at the time you take the loan. And because the loan is leveraged against the policy, it's one asset being leveraged against another asset, which gives you more purchase power. It gives you more access and more liquidity, because the original amount never leaves the contract. The insurance contract is still intact. The $50,000 that you infused is still there. You're just borrowing against it. You know what I'm saying? So when you pay yourself back, you're putting money back into your policy. It's multiplying at 6 to 8%. It's compounding, okay? And you're in a more advantageous situation than going to a hard money lender and paying a higher interest. The interest on the loan, I guarantee, is going to be higher from the bank than it would be going to your policy. So this is a strategy that I try to get people to think about. This is a exposure that I really try to present in terms of this is why we should network with each other. This is why we should be strategic partners. You know, your clients are more likely to understand this concept, and they're in a position where they have this kind of cash and they need to park it somewhere anyway. So if you're going to park it in a traditional bank account, there's also a tax advantage because you're moving a investment to an investment. So you never really took possession of the money. It never touched your personal bank account. So there's a tax advantage associated with going from one investment to another. So anyway, this is just a strategy. I'm trying to expose you guys to ideas, and that's my job. As an agent, that's what I'm supposed to do. I'm supposed to get you thinking about doing this. And to close this out, I'm going to give you a real life example. One of our agents owns a construction company. And this is why I say strategic partnerships, because she was out of the box thinking and was smart enough, even though she's a black woman, she was smart enough to understand this concept and then apply it to her business. But I'm trying to get other people to see it, understand it, and do it, because anybody can do it. It's about whether or not you apply it. So she owns a construction company. She basically had a city issuance for a 8-year construction deal on the Maryland waterfront to build condos and retail, and it was a multi-million-dollar deal. So what she did was she took out a $10 million life policy as a key man coverage for her business, and she had the bank pay for it. So it didn't come out of her pocket. It's for her business. It's against the waterfront project. So the collateral is the waterfront project that she's leveraging for the policy for key man coverage. And then that guarantees that if something happens to her as the sole proprietor of the construction company, and she was awarded this contract and the contract doesn't get finished, then all of the people involved with the project feel comfortable because they have the policy, and the policy will pay out against the project. So this is why I'm talking about advanced strategies and leveraging. Okay. And because she's the business owner, she owns the construction company. She was also the licensed insurance agent who brokered the deal. So she brokered her own deal in her own company, and her commission from that was $1 million. So what I'm telling you is that this is a real life example. This is not me talking out of my, and people discounting everything I say as if this is not real strategies, real implementation, and real companies are out here doing this. Okay. So strategic partnerships are important. Thinking outside the box is the way to get ahead, and leverage is the key, because you're putting one asset against another asset in order to create a stronger leap forward. So let's sit down and have a conversation. Let's actually start doing these strategic partnerships. Let's stop discounting everything I say, and let's get to a growth point where if you own a business, if you are a real estate agent, how about implementing these strategies for your company? How about you positioning yourself so that you're borrowing from you? You know, infinity banking works, and all you have to do is implement it in your next project. It allows you to get ahead faster because it's a lower cost of doing business when you borrow from yourself. The money is cheaper when you leverage it. And that's what I'm trying to explain to you guys. So please click the link in the bio in order to schedule a consultation, and let's really start making some changes in our community and some advancements in our lives.